Hi everyone. My name is Daumantas. I'm co-founder and CEO at TransferGO. And today I'm very happy to be here in Ukraine to share a bit about some of the recurring topics that we want to talk about. Today I'll talk about four things really. I will talk a bit about the Ukrainian market in terms of remittances and what has happened there in the last 5 years. I'll also talk about the pandemic effect and from a consumer perspective, what we've seen happening during this difficult time. Then the third topic is going to be Brexit, as we have survived it. And I'm going to share you how and what's happening there. And then I'm going to look into the future and what plans do we have to really connect Ukraine with the global financial industry to actually enable the new norm of global payments. So let's start with the Ukrainian market. So TransferGO today is 9 years old. We just celebrated our birthday actually last week, and we are processing 6 billion Great British pounds, 13-14 million transactions, sending money to 150 destinations globally, connecting Europe to the rest of the world. But for what's very relevant here is how does Ukrainian market look in this context? So since launch, in maybe 5 or 6 years ago, more than 1.2 million Ukrainians has trusted to use our service across Europe. And that means that we've become one of the major players for Ukrainians to earn money abroad and send it back home, predominantly Poland, Germany, but the rest of Europe is also catching up. We see a very interesting trend that people go to Poland, make their life there, and then move on to other markets to send it back. So 1.2 million is a very sizable part of our market, and also within the context of the market itself. That sort of makes us think that we have some interesting insights to share about how Ukrainians persevered through the pandemic as well. So we have a 1 billion euro sent, and these are small transactions. You're looking at a transaction between $100 and $200. Payday after 12 of a month, and Ukrainians wire the money back home, to pay for utilities, services, family care. So there's a lot of transactions happening. And over this time, we actually saved our customers between 20 and 30 million euros. So let's think about this number a bit. This number is, if you would take, it's very difficult to know and estimate what's the black market cost, because that cost can be as high as whatever you can imagine. But if you look at just the clean online or Western Union market, this is how much money we have saved and put effectively away from Western Union into the pockets of our Ukrainian friends. So we're very proud of that. And at the same time, we remain the most trusted brand in Europe with Ukrainians. If you look at our Trustpilot, every now third or fourth feedback there is from a Ukrainian customer, either in Russian or Ukrainian. So we're very excited about that, and we're just getting started on the Ukrainian front. So now let's look at COVID, because with 1.2 million, we have a pretty good idea what's been happening. So first of all, World Bank at the beginning of the pandemic has shared this article which said pretty much that remittances will collapse due to pandemic. That was their prediction. 50%, 30 to 50% global collapse of remittances. And they weren't exactly right, to put it mildly. What they underestimated is that effectively every single other payment function, local payments, luxury payments, peer-to-peer, point of sale, at the beginning of pandemic were hurt badly. And I know that because some of my investors actually have a lot of payment companies, and many of them went into distress over the beginning of pandemic. But what happened with remittances was actually very different. And let me explain why. So what we've seen, where World Bank was right, is that cash remittances collapsed. So because you physically couldn't go to your cash bureau and send money. But what happened as a result was that the digital market boomed over the same period, because when you think about the remittances and where remittances sit in your hierarchy of needs, a mother will probably stop spending for any clothes, any point of sale, any luxury, but the payment back to her, to their children is probably the last one that really stops. So what we've seen over the same period is that pandemic has accelerated digitization of remittances much more than any new entrants. Because we've been in the market for 9 years, and everyone largely underestimated how the digitization will happen, because the market is very unequally distributed. You have the digital early adopters that already are, point of sale friendly, contactless, and that's where a lot of us already are, obviously many people in this room. But if you look at our customers, we serve lower to middle class, mainstream consumer who are still, for whom Facebook is still novelty, for whom they are adopting digital technologies, but there is very large inequality of how people use digital. The fact that you have a smartphone doesn't mean that you're using it equally between how we use it in this room and maybe people use it in some other room. So, and with all the new entrants, digitization has been happening, but digital market has been growing maybe at 7–10% compounded year on year. But with digitization, with pandemic, that has actually accelerated significantly. And what we've seen in the first half of 2020, in comparison to the previous one, is that our volumes, the organic traffic, grew by 168% at the same time. So that was the first lockdown, because people got scared, people don't know what they're doing, they knew they couldn't come back home. So what did they want to make sure? That they at least provide and sustain their families who actually depend. This is their main source of income, this money coming in. And many of them actually tapped into their savings even. So let me talk about the pandemic, and we've seen 3 lockdowns, roughly, 3 waves. And those waves were very different. So the first wave was March, and no one knew what was happening. Everybody panicked. And when you panic, you expect the worst. You don't know how long it's going to happen. So at that point in time, all the payments stopped, remittances boomed, and what we've seen is that people were sending smaller transactions more frequently. So the frequency, so they were rationing their payments. They looked at their savings, they didn't know how long it will last. So let me just send smaller transactions more frequently. That was March. And that's what we see, a huge increase in the first. The second lockdown was already different. People already knew what was happening. The death rate was actually declining in many parts of Europe, and people were used to lockdowns effectively. They knew how it was going to happen, and they had a certain trajectory on when they will be coming back to work, and that they won't be losing. It's not going to be Armageddon. Because if you were reading many of the media posts in the first lockdown, it was, everything is going to be, the disaster is going to be, everyone's going to die, etc., etc. So people were already much more comfortable, and then there was summertime, there was a correction, and then the third lockdown was already things are coming back to normal. Even though people couldn't go back, couldn't travel, they were already getting jobs back, and now we've seen this interesting correction. Things are starting to go back to normal. What is not going back to normal is that people are not going back to cash. Because once you have downloaded the app because there was no other option, and you started using it 1 or 2 times, that's it. There is no reason for that. So the change, the digitization in European remittances is, we believe, permanent, and will further help people get access to better financial services. So it was a scary time, but if there is any silver lining, that actually exposed people to a better way of moving money. And what I'm describing here is not just us, it's across the industry. When I talk to all my peers in digital remittances, they all tell the same story. We have a view in Central Eastern Europe, Ukraine, Russia, Turkey, but if you look into Africa payouts or Southeast Asian payouts, where various friends play in our sector, they see very similar process. So that's, the winner here is a customer, loser here is Western Union, and in my mind we have a lot to celebrate because of that. So let's talk about Brexit quickly. So we have survived Brexit, and the thing is, the worst part of Brexit was everything leading up to the Brexit. This never-ending 4 years of uncertainty. when no one knew what was going to happen, you couldn't prepare for something that you don't know. So everyone was sort of sitting and waiting. Okay, so every single press release from Boris Johnson, every single view, every single opinion was escalated. So at some point you just shut down and you say, okay, once you guys make a decision, we will start paying attention to it. But what effectively happened is that other hubs, as it always, other hubs like Vilnius, like Dublin, like other places, they actually boomed as a result. We ourselves got licensed in our home country, Vilnius, Lithuania, and I've seen many companies go there, and effectively, client didn't even feel it because of various, but we need to innovate, and our compliance team had to figure out how do you manage multiple licenses, how do you assign them. There was a lot of behind the scenes work to make sure that experience remains to be frictionless, but at the end of the day, the Brexit change did not impact the customer that much in the short term. The long term of the UK as a migrant hub, of course, is weakened, and especially for non-EEA, non-European customers, it is a problematic place. But guess what? You have other hubs emerging as a result. Poland, Germany, Scandinavia. There is a redistribution because at the end of the day, the low to middle income jobs do not magically become available at home because there is Brexit. So what people do, they just go to another migrant hub. So I guess if there's any silver lining from there is that other hubs have become more exciting, more prosperous as a result. And I hope that my second home will actually eventually figure out that it's not the people that come there to work is the problem, that they actually have other very serious problems to solve. Because right now what's happening in the UK, you have shortage of labor. And that shortage is not being filled in by the Brits. And that shortage, it can't be filled in by Ukrainians easily because it's non-EEA. And then Lithuanians are also, it's a bit of a tricky situation from labor perspective. But again, the services, the fintech has actually survived and was able to innovate out of it as well. So that's, is there any good news? We can take that away. And finally, so over the last year, we've seen Ukraine as being a huge part, a very successful part of our business. And whenever we have this sort of trajectory, we will say, how can we do more? So for us, today the topic is global payments. So what we want to do next is to not only connect Ukrainians outside of Ukraine with home via better finance. What we want to do is connect Ukrainians in Ukraine with global finance. Because today, if you want to send money out of Ukraine to anywhere, it's SWIFT, it's $20 to $30, and the whole experience is not designed. Ukraine is not as integrated in global financial system as it should be. And even though if you were to compare volumes coming into Ukraine and out of Ukraine, the volumes coming into Ukraine obviously are much, much larger. And we've seen that, but over time, our thesis is that as the more Ukraine integrates with global finance, the more Ukrainians want access to best-in-class global products, financial, e-commerce, then you need to have a better financial connection between Ukraine and the rest of the world. And what we want to do is to make sure that we connect via our network Ukrainians and leverage the strong brand that we built and strong customer trust that we built. So for us, what we're working hard for the last couple of years actually, and hopefully we'll be able to get it done soon, is enable people to send money from Ukraine to the rest of the world. Is it for e-commerce payments? Is it for business purposes? Or is it peer-to-peer, leveraging our network? So we're here, we're meeting multiple partners and building this infrastructure. And we really believe that it can further transform how Ukrainian financial ecosystem is designed, but also bring much more prosperity to Ukrainian people. Because with 20-30 million saved on an annual basis, we're barely getting started. And that's really the power of better financial services. As that's why we're here. So thank you very much. We're very keen to talk to you and see how we make it happen. Thank you.
Thank you so much for your presentation. I just see that we don't have any questions on our slide do. Друзья, еще раз, вы видите еще раз, пожалуйста, QR-код на экран, да, чтобы наша аудитория, если что, могла задавать, не стеснялись писать вопросы. Если есть сейчас вопрос у кого-то из аудитории, да, есть.
Thank you very much for your presentation. My question is maybe not about the topic that main today, but it's about cryptocurrency. You may know that in Ukraine, virtual assets is already almost legalized, to say. What do you think about this? How these transfers can affect maybe your traffic or something like this?
So there's definitely an increasing part of cryptocurrency, the role the cryptocurrency can play in improving finance. You're talking DeFi, you're talking the next wave of financial services. If you look at payments itself, we have not seen crypto anywhere to do what they're promised to do. Because the reality of payments is that the problems with payments is less of a technological problem, less of a information exchange or real-time information management problem. It is correspondent banking problem, it is liquidity problem, and it's compliance problem, which none of these things are being resolved by crypto. In many respects, they make them worse. Because, you know, KYC, proof of funds, has become very difficult in that part of the world. So what we see in still mainstream correspondent banks, you know, it's very difficult to build a clearing network and be in crypto at the same time, because these worlds do not coalesce. So, you know, what we've done over the last year, we made 24/7 instant, fully automated process from transaction being paid in, transaction being paid out. Now we can settle money right now faster than you would get a push notification about that. So this has been solved in a way. The question is, how do you scale it? How do you bring it globally? And it's not equally distributed. But it feels like even without crypto's promise, this problem is being resolved. But actually, when you look at the backbone of it, it's solving compliance, it's making sure that big correspondent bankings are happy with your risk. A very unsexy topic, not techie topic, but that's what you need to do to truly innovate in this market. And on the back of that, you build your bank relationships, your card relationships, and then if they're happy with it, then you can innovate within that. So I would say there is a world for that, but it's not necessarily payments.
Thank you very much. We have a few questions, Daumantas. How do you estimate the saving for your customers with cash or traditional money transfers like Western Union or SWIFT? Just curious.
Yeah, so it's a very good question, and that's why we have an interval, because it's very difficult to know for sure. I mean, what we do, we take the average of what World Bank says the cost of it is, and we triangulate it with our own estimations on how much the cash operation works. If you were to take the cost of black market transactions, the buses, all of the means that actually are still quite prevalent, then the cost might be even higher. So we're trying to take a conservative estimate and look into our price, and that's where the number is coming up. But it can be even higher than that if you look at other means.
Thank you. And one more question. In terms of your plans to launch in Ukraine, do you consider local PSPs as competitors?
Partners. We are, I mean, in any market that we go, and Turkey is a very good example, we've done something very similar. We come in, we look at the best-in-class operators, and we build a service with them, so both sides win. Because what we bring in is last-mile payouts everywhere, but we need quality partners here who can actually process payment, acquire payments for us. So it's a partnership. As our network is built on partnerships where all the banks that participate in our network, the card schemes, they all get a cut on all of this. So this is we want to work with the innovative parties and build these partnerships with them.
Thank you so much. We don't have any more time. We are out of time at all. Thank you so much.